From Rabobank, this is a Rabo Research Food and Agribusiness podcast.
Welcome to another episode of Consumer Foods to Go Wrap. In this case, we're covering the month of March 2026, which was a phenomenally interesting month. The previous episode, the one covering February, we started by saying, Tom, oh boy. And now, what can we say now?
Oh lordy.
Right. Oh, welcome, Tom. Welcome, Maria. And thanks for joining me again. Let's not use the usual script because I believe we have so much to cover, but it doesn't fit in the usual welcome, please wait to be seated, menu, the specials, etc. Let's make this a buffet, make it different, and cover a few topics, starting with Iran. Which, again, we're recording this on the 25th of March. This is going to be live, as in downloadable or streamable on the 1st or 2nd of April. So there's a gap in between. So the world might have changed by then as well. But let's take today as the starting point. And today is the day that Trump apparently has sent a 15-point plan to Iran through Pakistan to discuss some sort of, agreement. And let's not even go there. Let's talk about food and energy. I think this is it, energy. So what does it all mean? Perhaps let's start with you, Maria, from a European perspective. Let's talk two angles here, consumers and businesses. Pick one to start with.
Okay, I will start with consumers to make a start somewhere and make some kind of a timeline because first of all, is to understand where are the consumers going to feel what and when. First of all, and it has been very light, is sentiment.
Yes.
And it has been very light mainly because in Europe, we haven't seen any scarcity and we are getting used to bad news. It's as sad as that. But that is very short-lived because soon starts the pain. And the pain starts in your pocket the moment oil prices go up. There are fantastic formulas in place, and almost immediately the cost of filling the tank of your car increases.
Yeah.
And a little bit later, the cost of warming up your house is going to increase as well. When we look at the recent history, these two increases are almost immediate. Now, of course, there is a case by case, because in some countries, households work with contracts that mitigate or defer these spikes in energy prices. In others, it's more spot prices. So every country is different. And the second difference is that this time round, the different governments have acted very swiftly. So we have seen in Spain and Portugal already a decrease in fuel taxes.
Yeah.
So that prices, when you went to fill up your tank, went up, but now they are already going down. But nevertheless, these are the first two pain points that consumers will be feeling.
Yeah.
What comes next? Well, I think we can go a little bit to see the whole process for corporates, and eventually, later in the year, what will come next is that the food prices will be higher.
Yeah.
So there is a time lag. Nobody's really thinking about that right now among the consumers. But I think by the time we are thinking about our Christmas menu, it will be much more expensive. And I don't have too much doubt about that, I'm afraid. This is in a nutshell what I'm expecting to happen with consumers in Europe.
I don't disagree with you. What is interesting, though, I've been discussing this timeline with clients of ours here as well. And what is really interesting is that, yes, they see the immediate impact. Already volumes are coming down here and there. But our story of that, the Christmas lunch in the UK or Christmas dinner everywhere else in Europe might become more expensive. I talked to one client who said, might be Easter, which is 2 or 3 weeks from now. But which is too quick. But the point is that companies are much more prepared to increase prices than 2-3 years ago, because they now know how to go through the motions. They've seen this before, and they might do it earlier than that. So initially, and I probably still am with your thesis that Christmas lunch will be much more expensive, but the price rises might happen for some products sooner than that.
Totally. I've heard also from conversations with corporates that they are already, for example, in packaging, increasing their prices already now.
Absolutely. Yes. Yeah.
The problem is that they are increasing their tariffs, but the actual prices paid by their off-takers will probably take a little bit more time to be in place.
Yeah.
So I probably think that Christmas is, it's a way of putting it, but it will happen earlier. But the difference between tariffs and real prices, let's hope, will mean that I don't have to pay more for the Eastern lunch. But yes, everybody's running and anticipating with what they have learned from the previous situation.
Yes, yeah. So it's different and same, but different. As in the price increases that can be expected are similar to what we had before, but the drivers are different. It's not so much wheat or sunflower oil, what we had in the Ukraine crisis. It's now just energy related, hardcore energy related, whether it is oil, diesel, the jet fuel, or related around that packaging materials that are very energy intensive.
I was going to jump on my chair and say, Cyril, don't forget the petrochemicals that go into packaging, which is crucial for the food industry.
Yeah.
And of course, fertilizers, which are already much higher. But for my understanding, after talking to our colleagues, is that it will not affect the cost of the current crops in Europe, because all these fertilizers were already bought and being used. So it will be more out from the autumn. And finally, before I stop monopolizing the chat today, another factor that is affecting consumers, and probably that will indeed affect them already for Eastern, is traveling prices, holiday costs. So we will see a little bit of reshuffling around that. First of all, holiday makers that were considering going from Europe towards the East may reconsider that for safety as much as for cost issues. And then going further into the year, it will be just a cost issue as flight tickets become much more expensive. That has a limited impact overall, but may have some kind of positive impact in the short term in Europe as holiday makers stay in the continent, and others, let's say for America, may consider Europe instead of other destinations.
Yep. Though it doesn't bode well for the summer and the summer holidays, especially for your country, for Spain.
Well, to be honest, it's probably not the worst place, because a lot of Europeans may just go there because at least they can get there without a plane ticket. But if fuel is much more expensive, probably they will stay shorter. Yeah.
Oh, that's and if there is fuel, which we have no clue about, but that's perhaps for another day. And when people are listening, the audience is listening to this, we might have a better view on this already. That's Europe.
Doing the next podcast. Yeah, I might be doing the next podcast from New Zealand. I'm headed to New Zealand tomorrow, Cyril, and they're talking about aviation fuel access in the New Zealand market. So they've got several weeks worth at this point in time. We'll see where they're at in a month when I'm hopefully home by then. But it's aside, with this whole situation, aside from the obvious kind of existential dread, I think most of us are feeling with the way it's impacting our industry, the consumer. I've been looking at it in our colleague Joe DeLaura, who always reminds us that energy drives everything. Everything we look at is really just some form of oil.
I thought it was the consumer, Tom.
The consumer pulls it, I guess. So, I was looking at it, though, in energy is clearly, as Maria's already gone through, the most direct way that we're going to be impacted. But actually, I ran some numbers to compare the pricing pass-through of high, energy shocks to the food CPI, in the 1970s and 80s, when we kind of last saw an Iran-driven oil crisis or oil shock. And what I discovered was food back then was much less responsive to those shocks. So we saw a 0.3% increase in food CPI in the US on the back of a 10% WTI oil jump. And so today, that responsiveness is 3 to 4 times higher. So what we see now is, say, a 10% increase in that oil price is going to be a 1 to 2% increase in our food CPI. And that's really because, today energy is really embedded everywhere in our food supply chain. And Maria, you just talked about packaging, fertilizers, the diesel logistics, the refrigeration of the system, from the whole supply chain. And compared to the 1970s, where we had much more local sourcing, lower processing intensity overall, today food has become a very energy intensive industrial sort of output. So we're seeing that correlation much more direct.
Yes.
Yeah, it's absolutely.
Ooh, so we are up for another jolly ride in the consumer space, I must say. And I'm not sure whether...
Cyril, I started the year saying that we see food CPI was going to be higher this year because of tariffs alone, but now we've got energy to the mix.
Nobody worries anymore about tariffs.
No, anyway, okay. So this is consumer, the picture, and I guess it's the same for Europe and the US, is just fairly bleak immediately in terms of disposable income coming down, but also towards, let's call it Christmas, could be earlier, in terms of food price inflation due to higher energy costs going their way through the system.
Let me add something about timing, because that may be different, not necessarily Europe versus US, but within Europe as well. Because we may see, as we were saying, Cyril, corporates reacting faster. But at the end of the day, when we go to the consumer, there is a big barrier, which is called the retailers.
Yeah.
And the retailers, for quite a lot of products, of course, not fresh products and some other stuff, negotiate annually. And for quite a few countries, the negotiations take place towards the end of the year or even January.
Yeah.
So that may also act as a bit of a delaying factor towards the end of the year.
Not convinced. I disagree with you. Because what might happen is that suppliers are going to say, prices have gone up so much, you need to help me out here. And I'm sure that retailers will push back. But what we saw in 2023 from memory is that we had multiple rounds of price increases during the year.
Totally.
So I'm not sure whether we will. The retailers, of course, will say, "Oh no, let's wait for the next round of negotiations." But I'm not there.
Yes, but keep in mind the big difference between 22 and now. In 22, even before oil prices, energy prices started to increase, we already had a whole year of rising food prices. Commodity food prices. And this year they are coming at the same time, if not later. So that's why I'm saying it will take a few months. Probably they could anticipate something, but again, it all points towards the second half of the year.
Let's ask our audience. And of course they will listen to this a week after this, but audience, please feel free to send us a message. Start with me, gilles.filot@rabobank.com. Send me a message, or Maria Castroviejo@rabobank.com. Thomas Bailey, is it right? Thomas.bailey@rabobank.com. And send us a message what your view is on when prices will increase in supermarkets. Because we have views, but we would like to be challenged here. Okay. Corporates will feel the pain and are feeling the pain immediately, as we discussed before. What I sense, so I'd love to hear your view on this, is that they are, or at least some of them, prepared slightly better than in the previous shock. Do you agree with that?
Yes.
Yeah, they're much more accustomed to this. It's not any more fun. It's already been a challenging market, but the system is much more familiar with the sort of pass-through and the dynamic of more volatile pricing.
Yeah.
For better or for worse.
Unless, the force majeure comes into play. And well, you're traveling to New Zealand, Tom. I was in Australia last week, where we've seen some minor but still noticeable force majeure issues around plastics already. So that might happen for fertilizer and other stuff as well. So the product may not be available. That's one thing. But in general, companies have tried to set up better sourcing systems, procurement
systems. That's what I hear as well. Yeah. But in some cases, their suppliers are already coming to them and saying the contracts we had in place, sorry, but they are not going through. So they are better prepared, but still the pain is unavoidable, and some of them are already starting to suffer it.
Yeah. And I'm
Mostly
sure that
under
yeah.
plastics and petrochemicals.
Yeah, and I'm sure that many companies have hedged some parts of their business, but I'm not sure whether many had, for example, a diesel hedge in place in terms of the risk around that. That's a new one. So yeah, you can't account for everything, I like to think. Anyway, so they're in for a rocky ride as well. It's going to be interesting. There's so much more to say about this, but let's save that for the next episode, because I might be in a new and different world by then again. What I do want to talk about as the next topic of this buffet is something you, Maria, mentioned, I believe, in our January. Now, in our wrap-up podcast for 2025, the December one, and you said you expected a lot of M&A in 2026.
Why did I say
which
that?
has
Why
happened.
Did I say that?
Yeah, it has happened.
Yes.
There is in the month of March in food, we've seen tons of M&A. I'd like to make a prediction here. We might be near to the end of that one, because uncertainty is not necessarily what people are looking for into M&A. But it is interesting what we've seen. Recently, a few days ago, Danone buying Human Fuel, it stands for, which is a plant-based protein solutions provider for a billion plus. Puratos, the bakery ingredients company, bidding for and agreeing to acquire Dawn Foods from the US for a substantial amount of money. And the biggie, which may or may not happen, is McCormick and Unilever Foods being in talks of Unilever Foods being sold to McCormick. So a lot of corporate activity. What's your take on that one, Tom? Let's start with you.
Thematically, we kind of see a few things going on. We see, I guess you call the Danone acquisition the first, well, one of the early GLP-1 type of acquisitions. I mean, heading down that sort of road.
Okay.
Well, the functional and complete nutrition business, tying it into Danone's broader platform. We also see, we talked about the complexity of the food supply chain. So, shedding complexity is kind of another theme we see going on, sticking to your core strengths. So, broad, trying to do too many categories, too many functions has proven maybe a difficult strategy in this very dynamic, ever-changing, volatile global market. So stick to your core. So shedding complexity. Scale, also means more complementary capabilities. So not just size. So I think that, McCormick, for example, with Unilever, it ties into a pretty good existing portfolio of products, and then you start to see it is somewhat transformative. It's transformative for McCormick, let's be honest, because I think it's Unilever's food business is something around $30 billion, and McCormick's market cap is half that. So it is transformative, but it also, when you think about the products and the flavors, the trends of the consumer, it aligns with that, and kind of adds some complementary capabilities to McCormick. The Dawn acquisition, they're in a definitive agreement. It creates a one-stop global partner in this space, combining scale and the science side with a global bakery solution. Yep. And then the other interesting one, because I talk about private label so much, is the Bredor acquisition of Panama, which
here in Europe,
it's more in your market, but what it does do is it brings private label capabilities, perhaps as another U.S. supplier from Europe, specializing in bringing some of those specialized capabilities to the U.S. market. Yeah. Bredor was already expanding quite fast in the U.S. And one thing that I've talked a lot about with our clients and with the private label market here is, watch out for the Europeans. They're watching us. They're looking closely at the opportunities here. They know what they're doing. They're highly specialized, highly efficient, and provided all things settle down and the global trade system starts.
Yeah, and in that particular case, by the way, it is about scale. I don't think that Bridor was very active in the Spanish market, and this is just covering Europe, because Bridor does have assets in the Netherlands and in France, especially, of course, that's where they originate from, and in a few other markets, including Canada and the US. This is also scale building, which is the game in the bakery sector. Fascinating sector, bakery sector. Feel free to reach out on how that has developed over the last 2 years, because it was very fragmented, and now is very well getting consolidated, must say, with a lot of changes around it. But that's on the M&A side. Maria, anything to add to Tom's observations?
No, I think the underlying thread is alignment of businesses, synergies, rather than what we saw a few years ago that was complementarity, diversification. So the buzzword has changed completely.
Yeah.
I was laughing and saying what I said, Sadat, because of course we may have seen the most of it. There are still a lot of players with big pockets that may still grab opportunities, but going forward, of course, we have a couple of issues that are, not suitable for M&A. One is uncertainty.
Yeah.
And the second is potentially higher interest rates. So,
which is an interesting one. With higher inflation, you would sort of expect that to happen.
May happen, may not, but that is a risk, nevertheless. So if it happens, it will again add another headwind to M&A. But uncertainty, I believe, is already big enough.
Yeah, so much depends on how long this conflict in Iran will last, and how long. Well, more importantly, I guess the Strait of Hormuz will be blocked. Today's news is that about 10% of the ships are going through. Again, this is the 25th of March, so we don't know what it is tomorrow. But yeah, that's an important driver to global inflation.
Yes, and don't forget the capacity that has been shut down or damaged.
Yes.
Because that extends the impact of the whole conflict further than the conflict itself, perhaps. So even if we got a solution today, it takes some time to rebuild that capacity. Yeah,
agreed. And we're talking geopolitics again.
Sorry.
Which we've tried to avoid in all the previous podcasts, but now we just it is so impactful for you for us as analysts, but for our clients especially. So not much more M&A expected, I guess, right? Well, who knows?
More selective, at least, if anything.
Yeah. Yes. Oh, well, evaluations.
Or opportunistic, given that there could be some crunch in the market with the costs coming up, the supply chain issues, the things we've discussed already. It could be opportunistic stuff, but from a strategic planning standpoint, it certainly is a big roadblock at this point in time. It's you don't want to make any big decisions right now.
No. I think that's the point. Let's wait and see what might happen from here, and whether there's a point of stability to try and make decisions. Okay, that's on the M&A topic. You can almost forget that actually, products are still being developed, and you see new products coming to the market, and the consumer continues to consume, even though perhaps differently from here. And the both of you went to very interesting trade shows. In the previous podcast, we already flagged that Tom would be visiting Natural Products Expo West, and he did. Maria, you went to Alimentaria Hostelco in Barcelona in the last few days. Let's start with you, Tom. What is the key things that you noticed walking the floor at Expo West in Anaheim a couple of weeks ago?
It was humming as always. I actually thought things might be a little quieter, so we actually saw attendance rose this year, over 66,000 people. The exhibitors apparently did decline, though, slightly. I think last year might have been peak year for total exhibitors, and it's not a huge surprise given kind of the pullback in the space. I say that delicately, but a slight pullback in terms of just fewer fads, more scrutiny on opportunities for businesses. As we said, that complexity, that broad portfolio strategy just doesn't quite isn't as appetizing, no pun intended, in this market. I didn't see one single sort of overheated category as we've seen in previous Expo West, like where we saw plant-based or mushrooms, and precision fermentation and these types of very disruptive trends. I mean, that's kind of been slowly easing over the last couple of years, but it was very apparent this year. There was nothing that really stood out so loud. I mean, GLP-1 was there, right? But it's kind of hidden a little bit because they don't want to explicitly say this is a GLP-1 product. I think a lot of times it's more coded in the language of the high protein or high fiber or probiotic or gut health and those types of branding strategies. So I didn't, you would see GLP-1 as an overarching theme, but then when you actually look at the products, there wasn't so much GLP-1 stamping on it, but it's absolutely present. They're just the branding strategy to leverage GLP-1 is interesting. It's kind of coded to include all consumers, because I think if you put GLP-1 on a product, it raises questions. It's like I'm not on GLP-1, but everybody seems to want more protein, more fiber, and better gut health. Regenerative ag and women's health were two other themes that we saw over the last several years. That was slightly quieter, I would say. Still present, but maybe a noticeable kind of calm there. But yeah, protein everywhere, functional ingredients, very mainstream, gut health, probiotics, prebiotics, postbiotics. And then mood-based ingredients, functional ingredients. So ashwagandha was very present, L-theanine, melatonin. These are all kind of like, and I probably need some of these beverages and things to help with sleep, as an example. And some of the beverage products. But the point is all these things are kind of geared around calming people down. I think in this market, it's probably not such a bad. I think we all need to calm down because it's a pretty crazy world out there. So those are all mood calming, functional ingredients that we see. And then lastly, I guess the overarching theme was capital, I think, is a little more selective of where it's going in this market.
Yes. Which was the same last year, no?
It was, yeah, but I'd say even more so. It's even more the case now that the investment frenzy has clearly cooled. Strategics and PE are really prioritizing a proven track record, profitability, top line growth. Instead of kind of rolling up small and emerging brands, that strategy appears less viable in this market. It's more, can we tag on one or two that are more meaningful to the top line?
Yeah. A great summary of Expo West, which at one point I wanted to interrupt you because you talked about all the functional ingredients. It was really interesting to see in the UK that Marks and Spencer's, which is the high-end food retailer and other retailer, but the food side of things, they've launched their nutrient dense range, a whole range of ready meals and other products labeled nutrient dense. I think this is phenomenally interesting. This is where the world is going very, very quickly. And this is what you've been talking about here as well. Functional ingredients are the 2026 story. And whereas protein was the 2025 story, it's much more the entire pack of ingredients, the entire solution that is being provided to the consumer. That is what is now marketed quite aggressively. So I think that's the big story for this year. Maria, in Spain, they don't care about GLP-1s because they're very healthy. And they don't care about nutrient density because they already eat very healthy. So what are the things you saw in Spain?
Well, first of all, I think they do take GLP-1 drugs, but they keep it low profile.
Okay.
First of all, for those who are not aware of what Alimentaria Hostelco is a very large trade fair focusing on food, also addressed towards the retail, but also food and equipment addressed towards food services. It's all combined. I understood there were more than 3,000 exhibitors, and the first day more than 30,000 visitors. I believe they were expecting more than 120,000 in the whole 4 days. Just to give an idea of the dynamics, international, but with a very strong national focus. So we also had Italian, Chinese, the country of the year was Poland, but I would say Spaniards dominate. What did I see? Funny factor before I go into the product, the core concern, let's say, is about demand. Nobody seems to be drastically obsessed with the costs right now. Of course, it's also the dynamics of a fair where people are trying to sell and other people are buyers. But it was about demand. What will happen with the final consumption? What will happen to demand?
Yeah.
So that was a sort of a general trend. In terms of products, well, this is Spain, right? You mentioned the eating patterns are different to the US. So there was a large proportion of real food. So animal protein as, chunks of meat and you name it.
Real
Cheese.
food, I love it.
So yeah, real food. Interesting, and I don't know how that will fare going forward. There was a lot of products aiming to premiumize the offer. We saw quite some innovation of ingredients. So for example, spheres. So these are little balls that look like caviar, but have actual flavors in them. Premium sprouts, so that is like small crests or other kind of natural ingredients that are ultra premium. We saw quite a bit of this in terms of novelty. Obviously, they want to put it on the retail, but first targeting is to get them introduced in food service because they are more open to that. We saw a lot of better for you snacks, that is sort of crisps that are based on pulses like lentils, etc. They are not new for Expo West, but they are fairly new in Spain. High protein. One product was sort of chocolate chips that had egg white inside. So I think it was over 40% protein. I didn't taste them. Don't put this straight.
I would love to know what your verdict, but that's for next year.
No, I didn't taste them because I didn't have the chance. But so this kind of more premium product or higher added value definitely going into protein. When you go at the food service area, we saw a lot of equipment that facilitates use. So big kitchen equipment where even us three could make something out of them, even without big cooking knowledge. Equipment that has multifunctions, whether it's grilling, roasting, boiling. That was drawing a lot of attention from the public, probably because it facilitates doing more with less knowledge and with less staff.
Yeah.
Fun factor about evolving route to market, there was a whole stand of food trucks where you could go and buy a food truck to sell food. So, yeah, innovation perhaps more for Spain than when I look at them for the US.
Yeah.
Going on the same path, premiumization, or at least trying to get some premiumization, question mark whether it will work or it will get just the attention at the fair, and protein, a lot of protein.
Okay. Time to wrap up. We've covered so much in this buffet. It's basically 3 items that I've asked you questions on. The war in Iran will have impact on consumers, most definitely, and will have impact on food businesses. Well, any business really, but we have a food podcast on food businesses, and it's we don't know how this will play out, but that it has an impact is for sure. And we should watch prices around Christmas or perhaps even around Easter. Who knows? Second one, M&A has been, as we predicted, really going well, and now it might not go well because of all the volatility. That makes a lot of sense. And if I summarize the 2 trade shows that you just mentioned, it is about functional ingredients, whether it's protein or the entire basket of functional ingredients that is being offered to the consumer in one type of solution. It is what the consumer is looking for. So that is perhaps another fundamental change that we're seeing in the market. Wow, we are 30 minutes, a bit more than 30 minutes into this podcast. We've covered so much. Audience, usually we would ask you to send in questions. Please do so again. This time we didn't even have time to discuss those. But feel free to send in your questions or requests at cyril.filot@rabobank.com, and we'll discuss it in the next episode, unless a lot changes again, of course, in the world, and we do another buffet episode instead of a regular a regular restaurant episode. Maria, thanks so much. Great to see you.
Thank you. Thank you for having me. And just another reminder of a request you launched earlier in the podcast. We would be more than happy if you could send us your views on what's going to happen to prices, B2B, B2C, and when. We will be thrilled to get your input.
Absolutely. Tom, thank you.
Thank you. Let's hope that next month is a little calmer. I don't know if I can handle much more.
Well, it would be good.
Action.
Yeah, it would be good if it would be calmer, because you would then get back from New Zealand to the US.
That's part of it, Cyril. That's part of it.
The audience, we may or may not have Tom on. Not that they don't have internet in New Zealand, they do, but you might not be on top of all the latest trends and things that we're seeing.
Or I'll be recording at 4 a.m.
Yeah, that's also true. Okay. Well, thank you, dear listener, dear viewer, for streaming, downloading this episode of Consumer Foods to Go Wrap, and we'll bring you another episode in a month from now. Thank you.
Thanks for listening to this latest Rabo Research Food and Agribusiness podcast. To hear more up-to-the-minute expert analysis, search for Rabobank on your favorite podcast app and follow our channels. Visit research.rabobank.com for more.